So we'll start with a simple calculation that we do. Actually, it's not required because it's directly given, but since I do it in every problem, I will do it here. So total issue is 1,50,000. Out of this, less applications, including firm, applications including firm are 1,40,000. So normally what I used to do, I used to take the total issue minus public minus firm. But here the firm already included in this, so I don't need to do it separately. I just need to know how much has to be taken up by the underwriters, and that will be 10. So 10,000 have the shares have not been taken up by anybody yet, which will have to be taken up by the underwriters. Okay. So we start. Okay. Another thing that we need to decide, since as firm underwriting the problem, they have not told us how to solve, whether benefit given, benefit not given. I told you you're free to choose the scenario. So again, I will choose. They have not given us the scenario under which to solve whether benefit given or not given. So I will choose benefit not given. Okay, I will do problems with benefit given also. Statement showing liability of the underwriters. Okay, so I'm going to solve under when benefit slash credit of firm underwriting is not given to individual underwriters. When benefit slash credit of firm underwriting is not given to individual underwriters. Okay, so we're solving under that case. So we have particulars. The three underwriters. We start with the gross liability. Okay, now we know that the gross liability, the total is 1,50,000. So 1,50,000 has to be divided equally. So 1 is to 1 is to 1. How I know here? The issue was underwritten equally. So each one has taken responsibility for 50,000 shares. Next we have less marked applications. Less marked applications. Marked applications are 40, 46 and 34. 40,000, 46,000 and 34,000. Okay, so on less marked applications, so we get here 10,000, then this becomes 4,000 and this becomes 16,000. Then we minus the unmarked applications, less unmarked applications. Now, when we take the unmarked applications, we need to be a little careful because we are solving under benefit or credit of firm underwriting not given. So, to the unmarked applications, we will have to add the firm underwriting. Now, the unmarked applications are 7,000. Okay, so to this unmarked applications, I'm going to add firm underwriting. Firm underwriting is this firm application. So, you have a total of 13,000. So, that becomes 20,000. Okay, and they have said that this has to be divided equally. It was agreed to credit the unmarked applications equally to Ali and Charlie. So this has to be divided equally. So how did I get this 20,000? 7,000, which is your actual unmarked applications. To this, I add the firm underwriting, 5 plus 5 plus 3, 13. And this I divide equally. Now, normally I would have divided in the ratio 1 is to 1 is to 1. But here they've clearly mentioned that it has to be given only to Ali and Charlie. Okay, so it will be 10,000. This guy does not get anything. And here it will be 10,000. Okay, so if you see here, uh, this has come down to Ali doesn't have to take up any shares. Here it is 4,000 and here it is 6,000. Okay, so I think we are on track and we are correct. Our total issue was 1,50,000. Out of 1,50,000, 1,40,000 has already been taken up. 10,000 was not taken up by anybody. So Bali has to take 4,000 and Charlie has to take 6,000. There was no surplus and not anything to be divided. So we call this liability as per agreement. Okay. To this we add firm underwriting. To this we add firm underwriting. The firm underwriting of, just to know the total of each one, is 5, 5 and 3. And then we have the net liability. The net liability. So in case of Ali, okay. So in case of Ali, the total shares to be taken up are 5,000. He didn't have to take anything as per the agreement. He just has to take up his shares under firm underwriting. In case of Bali, 4,000 under the agreement, which nobody took up, and 5,000 as per firm underwriting, so a total of 9,000. And in case of Charlie, 6,000 as per agreement, and 3,000 as per firm underwriting, so a total of 9,000. Okay, if we had solved under benefit given, this thing may have been totally different. This thing may have been totally different. So the fact that there's nothing mentioned, you're free to choose the case. Okay. Sometimes if you had solved under benefit given, maybe there would have been a surplus and additional calculations also. So it just depends on the case, on the scenario that you have chosen. Now we go on to the next statement, which is a statement showing amount due from underwriters. Statement showing amount due to slash due from underwriters. So again, we have the same names. Okay. So like I said, this statement starts with the answer of the previous statement. So I say number of shares to be subscribed by the underwriters. Number of shares to be subscribed by the underwriters. So in case of Ali, it is 5,000. Here it is 9,000 and here it is 9,000. So I close this. Okay, so number of shares to be subscribed 5,000, 9,000, 9,000. I close this because from here onwards we start in rupees. It's an amount. Okay, this is just the number of shares, but from here onwards it's going to be in rupees. So the next thing that we check is how much is payable on application. So we say amount payable on application at the rate of rupees. Now how much is payable on application here? At the rate of rupees 60 per share. Amount payable on application is rupees 60 per share. 60 per share. So if I multiply 60 with this it will come to 6 5 it will be 3 lakhs here. Here it will be 5 lakh 40,000 and this will be 696 again 5 lakhs 40,000. 5 lakh 40,000, 5 lakh 40,000 and 3 lakhs. Okay. But we know that out of these amounts, the underwriters have already paid on part of the shares. That is the firm underwriting which happened right in the beginning. Like I said, the moment you express your intent to purchase shares, you need to pay the application money. So right in the beginning, even before the public issue is made, the underwriters had agreed to take up a certain number of shares under firm underwriting. That means the amount has already been paid on firm underwriting. So I minus here less amount paid on firm application. We call it firm application, firm underwriting at the rate of rupees 60 per share. At the rate of rupees 60 per share. Amount paid on firm application at the rate of rupees 60 per share. Okay, so multiply each one's firm application with that rupees 60. So if I here I've got the firm handwriting. In case of Ali, it will be 60 into 5,000, which will be 3 lakhs. In case of Bali, it will be 60 into 5,000, which again will be 3 lakhs. And in case of Charlie, it will be 60 into 3,000, which will be 1 lakh 80,000. Okay, so what did I do? I took each one's firm underwriting. So 60 into 5,000 will be 3 lakhs. 60 into 5,000 again 3 lakhs. 60 into 3,000 will be 1 lakh 80,000. Okay, so the next thing that we have is the balance payable by the underwriters, which is the first part of the statement. Balance payable by the underwriters. Okay, now in case of Ali, he does not have to pay anything. Okay, and if you see, he does not have to take up any shares, hence he does not have to pay anything. In case of Bali, it will be 5 lakh 40 minus 3 lakhs will be 1 lakh 60,000, and here it will be 1 lakh 80, 2 lakh 80, 3 lakh 80, 4 lakh 80. It will be 3 lakhs 60,000. You can also check your answer by multiplying 60 rupees with these amounts. Okay, so 6. I got the, sorry, this is not 1 lakh 60. This will be 40,000. 2 lakh 40. Made a small mistake. It's on 1 lakh 60. It's 2 lakh 40. So if you multiply this, if you multiply 60 rupees with this, 60 rupees into 4,000, you'll get 2 lakh 40,000. 60 rupees into 6,000, you'll get 3 lakhs 60,000. Okay, so this is the balance that is payable by the underwriters. Balance that is payable by the underwriters. The next thing that we have is, now we check how much commission has to be paid to the underwriter. So what the company has to pay the underwriter. So I say less underwriting commission. Okay. So here it is Ali and Charlie. Okay. So each one's commission is equal to, in case of Ali, commission always on gross liability. So here it will be everyone's gross liability is the same, 50 rupees. 50 rupees into the issue price of shares. The issue price of shares here is 100. The shares are issued at par itself, at face value. So the issue price of shares is 100 and the rate of commission is 2.5%. So into rupees 100 into 2.5%. So it's going to be the same. I'm putting the same thing because all I've taken up 50,000 itself. So the commission is going to be the same. So if I multiply this, I will get 50,000 into 100 into 2.5 divided by 100 will be 1,25,000. So they all get a commission of 1,25,000. So this is the amount the company has to pay the underwriters. Now the final thing that we see is who has to pay whom. So I say amount due to, the final part, amount due to slash due from underwriters. Due to slash due from underwriters. Now in case of Ali, the underwriter does not have to pay the company anything because he has just taken up share. He has to take up shares only under firm underwriting, which are already paid for. So the company has to pay him. So company has to pay him 1,25,000. In case of Bali, Bali has to pay 2,40,000. Company has to pay 1,25,000. So finally, the underwriter will have to pay the company, and the underwriter will have to pay an amount of 2,40,000 minus 1,25,000, which comes to 1,15,000. Same in case of Charlie, the underwriter will have to finally pay the company because he has to pay more. That will be 3,60,000 minus 1,25,000, which would be 2,35,000. 2,35,000. Okay, so students, we have done these two statements. Okay, so in case of Ali, the company has to pay the underwriters, but in case of Bali and Charlie, the underwriters have to pay the company. So we have already calculated that. And the last thing that we need to do is pass the journal entries. The journal entries in the books of the company. Okay, so that's the last thing that we have to do to reflect all these transactions that have taken place. So the name of the company is Sardar Limited. Journal entries in the books of the company. In the books of Sardar Limited. So we have the particulars. Particulars, debit and credit. Okay. So what we are going to do is we have to reflect all these transactions that have taken place. So like I did in the first problem, the first thing is always for the receipt of the application money, the first thing that happens. So our first entry is bank account debit. So the first entry is bank account debit. Bank account debit to share application. Bank account debit to share application account. Okay, now we need to know on how many shares application money has been received. So I think we already have that total that the application money is received on 1,40,000 shares. In the previous problem, what I had done, I had taken the public application, the public subscription. So I started with the journal entries. So we were talking about how much has been received on application. Okay, so 1,40,000 has been directly given to us in the problem. In yesterday's and or in the previous problem, what I had done is I had taken the public subscription and the firm underwriting and I put it together. But here it's all given to us. Okay, marked, unmarked is given to us. Firm application, all is put in this 1,40,000. So I know the amount directly, so I don't have to add anything. So I will just say 1,40,000 into rupees 60. 1,40,000 into rupees 60. Okay, so yes, in the previous problem I had to find this amount because I put firm underwriting plus the public subscription together. Here it's directly given to me. Okay, so 1,40,000 into rupees 60 will give me 1,40,000 into 60 will be 84 lakhs. 84 lakhs. Okay, so I'll say being application money received on 1,40,000 shares at the rate of rupees 60 per share because application 60 rupees is collected on application. Okay, so that's the first entry. Then the second one is transfer the application money to the share capital account. So share application account debit. Okay, now whenever we are doing this, always leave lines because the balance needs to come from the underwriters. Okay, so always leave lines because the balance needs to come from the underwriters. So a share application account debit to equity share capital account. Equity share capital account. So we already have 84 lakhs in the share application account. We already have 84 lakhs in the share application account. Now we need to transfer to equity share capital. What are we going to transfer is basically the amount on the total issue. Okay, we expect that the entire issue will be purchased or will be subscribed to. Even if the public do not subscribe, we have hired underwriters. So we expect the application money to be received on all 1,50,000 shares. So when I'm transferring to the share equity share capital account, I'm going to say 1,50,000 into rupees 60, which will be 1,50,000 into 60 comes to 90 lakhs. Okay, 90 lakhs. Now the question is 84 lakhs has been received, but what you're transferring to equity share capital is actually 90 lakhs. Who's going to pay the balance? The balance will be payable by underwriters, and that balance should tally with this. Okay, that balance should tally with this. If you see, Ali does not have to pay anything. It's only Bali that's 2,40,000 and Charlie 3,60,000, which comes to 6 lakhs. And if you see the difference between this 90 lakhs and 84 lakhs, it is 6 lakhs. So I'm going to say Bali's account debit, Charlie's account debit. Okay, so Bali has to pay how much? He has to pay 2,40,000 and Charlie has to pay 3,60,000. 2,40,000 and 3,60,000. If you do the calculation, this total 84 lakhs plus 2,40,000 plus 3,60,000 will come to 90 lakhs. Okay, so this balance here, when you're transferring to share capital account, you need to be a little careful. You first transfer to share capital the total amount, okay, on the total issue, and then the balance will be adjusted towards the underwriters. So, narration being application money transferred to share capital account, and the balance adjusted towards underwriters, underwriters. Okay, so this is the entries where we show the application stage. Next we record the underwriting commission. Allotment comes later. Allotment, we finish those first five entries and then we show the allotment. So the next thing that we have is recording the underwriting commission. Since we are in the books of the company, underwriting commission, underwriting commission is an expense to the company. So I say underwriting commission account debit to all the underwriters, to Ali's account, to Bali's account, and to Charlie's account. Okay, so if you see, all of them have an equal underwriting commission of 1,25,000, 1,25,000, 1,25,000, and 1,25,000. So that will come to 3,75,000. 3,75,000 being underwriting commission payable recorded. So this is the underwriting commission payable. They actually don't pay these amounts, but they finally adjust. What happens is the adjustment takes place as to how much the underwriter has to pay the company and the company has to pay the underwriters, and only the balance is paid. Okay, so those are the next entries. So the next entries will be who has to pay who. Now, in case of Ali, the company has to pay the underwriter. Okay, so I will pass that entry first. Company has to pay the underwriter. So money will be going out. So I will say Ali's account debit to bank. Ali's account debit to bank. So how much does the company have to pay the underwriters? The company has to pay the underwriter 1,25,000. Here also 1,25,000. So I will say being amount paid to underwriter, just one, underwriter after adjusting underwriting commission. Okay, and in case of the other two, the company is going to receive money. The underwriters will have to pay the company after adjusting the underwriters commission. So it's going to be bank account debit, money is coming in, bank account debit to Bali account and to Charlie's account. So in case of these two, it will be 1,15,000 plus 2,35,000. 1,15,000 plus 2,35,000. That will be 3 lakhs 40, 3,50,000 in total. So the company is going to receive 3,50,000 in total. 2 lakhs, 3 lakhs, 3 lakh 10, 3 lakh 40, 3 lakh 50. So these are the usual 5 entries that we normally pass in every problem. Now in this problem, we are going to go a step ahead because they've also told us about the allotment. Okay, we also know how much is payable on allotment. In the previous problem, we didn't know how much was payable on allotment. So we stopped after the amount who has to pay who. But in this problem, we know how much is being paid on allotment. So I go a step ahead. So I think you all know the allotment entries. First, pass the entry for allotment. That will be share allotment account debit to equity share capital account. Okay, and then how much will that be? Now, when you're talking about allotment, if you remember application, we took 1,40,000 shares. But when I'm going to take for allotment, all the shares have been applied for. All the shares have been applied. So when you're actually allotting the shares, it's going to be on 1,50,000. That's the total issue. Because who took up the balance? Even though we are showing application money here on 1,40,000, we are showing that the balance is going to be taken up by the underwriters, and it's already been paid for in these transactions. The underwriters, whoever was supposed to pay, has already paid. So when we are doing the allotment, we are going to do it on the whole issue, because the whole issue has been applied for has been subscribed for either by the public or by the underwriters. So it's going to be into rupees 40. Why rupees 40? The face value of the share is 100. On application, 60 has been collected and the balance on allotment. So the balance becomes 40 rupees. So 1,50,000 into 40 is going to be 60 lakhs. 60 lakhs. 60 lakhs, and the narration will be being share allotment money, or being amount on share allotment transferred to share capital. Transferred to share capital. The last one is bank account, the receipt of the allotment money, debit bank account debit to equity share allotment account, or to share allotment account. To share allotment account. Okay, that's where being amount on share allotment receipt, or being allotment money receipt. Being allotment money receipt. If you want, you can write on 1,50,000 shares at the rate of rupees 40 per share. Okay, so these are the entries. So these are the two extra additional entries that we did in this problem only because they mentioned the allotment.